Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about our daily swing trading routine that I try to do every single day. Now, a lot of this entails looking at our stocks that we're holding, understanding where we're going to be taking profit, covering our losses, and then stocks with opportunity, our watch list, going in, setting alerts, moving alerts. All that stuff is crucial for your trading. So a lot of people think that trading is just like constantly buying, selling, getting in and out of positions, but they don't see like behind the scenes of you setting alerts, being prepared, planning out your trades. All of that is crucial for your trading. So I hope you guys all enjoy it. If you do, hit that like button, subscribe, and if you guys want to learn more about trading, check out our school. It's awesome. We have private live streams, quizzes, lectures, a group chat. More importantly, we actually teach you to trade. It's not a get rich quick. It's not alerts or anything like that. It's using basic strategies, basic indicators, basic scanners to help you with your trading. It's awesome. It's great whether you're a beginner or you're a full-time trader. And we're doing a 50% off sale, only valid for today and tomorrow. Given that it's election day, code VOTE for 50% off. So click that link, sign up, and I'll see you guys in there. So let's jump into this here. So as of right now here, we're holding 3 positions. So the thought process I had with all of these here is very, very simple. You guys can see that Apple has pretty hard hourly support near and around that 220 range. So now the thought process I had with this stock here that we're already in on is, let's go ahead and plan this out. So what we want to do here, since we're in right here, our target price is going to be up here at moving average line. So it's only like 1-2%, but our stop loss we're going to keep kind of tight, just kind of down below here. So, this is like a 2-to-1 risk and reward. And obviously we do want to see the stock squeeze up even higher. Like that would be great, but I think it's possible and very more realistic in this range. Also, I think right now, if we get up on our money to like, the 224 range, 225, we'll probably cover our profit in here. And the reason why is because I just want to take our profit with this one and move on to other plays, because Warren Buffett is starting to sell some of his Apple stock. And this causes a lot of retailers and even hedge funds to kind of follow what he does. So if we can be up on our money, a couple $100, we'll just take our profit, move on to other plays here. Then another one here that we're in on is Costco. So Costco here, you guys will notice on the hourly time frame, it's sold off, right? So we got in on that breakout really low. We're already up pretty handsomely right now. But the thought process with this one is very simple here. Let's go ahead and draw this out. So as of right now, the price is, near and around the 885, but we got in, almost on the peak bottom. The thing about trading is you'll never be able to buy in on the peak bottom and sell at the peak top. It's very, very difficult. So the thought process I had with this one's very simple, setting our target up at resistance in that resistance zone, keeping our stop loss just in here. Right, so now it's like a 5-to-1 risk and reward, which is really, really good. And the stop loss with this play here is going to be below this trend line, so about 880 and right in that range, which is good. So now here, the last one that we're in on is KFY. KFY here is just rallying its way up using this trend line, as you guys can see, as heavy support here. So now we're just going to continue to let this thing rally up. We also had something called a golden cross, where we had that blue moving average line break up through the red. The last time it did that here in the past, it followed by great buying pressure, so we could see that in the future. In this play here, if you look at like the hourly, was a perfect play. It had heavy support here on this trend line, right? You guys can see it had heavy support here, boom, boom. So you got good buying pressure there. Also had a moving average line, several support lines, undervalued on the RSI. Everything just worked out really, really well for this. So the target is going to be up here, like 73. The only issue we have with this stock as of right now is this. It is approaching some resistance. So if we do get a little dip down, like always, we could just take our profit, move on to other plays here with this. All right. Now, the biggest thing with your trade and your trading is going to be planning out a lot of your entries. A lot of people think that trading, is just looking at a stock going, all right, I got to buy. No. When in reality, a lot of your trading is already like kind of pre-set up. Like you have a general idea, okay, if this stock does this, I'm going to do this. If this one does this, I'm going to do that. So with ESRT here, you guys will see it's a 90-day moving average play. We also have kind of like this little downward trend here, as you guys can see. So, the approach here is very simple, at least for this one, is if it can break up above this trend line, we could be in on a position, as well as pretty much above these moving average lines. So, what I would do here is I would throw an alert above that 200-day moving average line. So now, if this stock gets a little momentum, gets a little buying pressure, we could enter up here, right? Set our target price at resistance. So up here, boom, boom. So that's about 6%. Keep our stop loss about 2%. So about there. So that would be kind of the play that I would like to see. 3-to-1 risk and reward. And the thing is we would want to find some sort of trend line like this, and we could keep our stop loss just below it. You guys will kind of see this one here. This one kind of already did that. We kind of missed the boat because guess what? I was not prepared, right? A lot of trading is just being prepared. If I would have had an alert set in several locations, we could have gotten notified here. You can see the huge, distance between, like you see how close this is hugging this moving average line. So the thing about this one here is you could have got in on the breakout of here since the moving average line was kind of farther away. So just kind of missed the boat with that one. But with trading, that will happen quite often here. This one here is still kind of riding this trend line. We could see a little momentum going in this direction today. LIN here sold off due to bad earnings, got a little rebound. For me to be interested, I probably would want to see it up a little more, but yeah, we'll just delete this one and move on to another play here. You can see here with this would be like a gap to fill. The only issue I really don't like is you can see these long wicks right here. These long wicks represent really good selling pressure. So you kind of want that on the other side of the candle, because then it would represent buying pressure. This one here is a price support play, so you can kind of see like the heavy amount of support, in this range, right? It hits it twice. So the move would be from like $16 to about $18, setting your stops below 16, below here. So let's go ahead and do that. So target there, our stop loss just below about here. So, 2-to-1, it's not the greatest, but I do think the hourly does look a little better here. If we can get a push above what looks like the 200-day moving average line, could see a little momentum shift. So we just throw an alert. And if you have an alert here, then you can just kind of drag it up. Similar thing here with Coca-Cola, down on that trend line here. This one, let's see here. So it's still on this trend line. I do think for this one, I do want to see it above these moving average lines. And the reason why is because the last time it was above the moving average line, this was after hours, but before then, you can see it kind of popped up, rallied up a little bit, right? And even previous to that, you can kind of see it hit these moving average lines. So I would really want to see it, at like 66 to like the mid sixes, so 66. So we'll just throw an alert here. I think that would be a very fair thing. And then if you have a alert already set, so what you want to do is just save it, and you can just delete the ones that you already have. So if you have a couple already set, we'll leave the one at 59. And you can always adjust them too. So, if you don't want to have a lot of alerts set, you can just adjust the ones that you currently have. But yeah, that's what a lot of trading entails, is literally just going in and kind of looking at, you can kind of see where this popped up a little bit. So we could see a nice little move out of this. So what I would do is kind of just jot this one down, CAR. And now when the market opens in a couple of minutes, there could be a possible play. So you could look at, lower time frames like the 15 minute, and see if it uses anything as support in some sort of trend direction. That's kind of what I would recommend doing here. So this one, going to the daily, right? It's a 200-day moving average play, general trend line going down, long-term trend coming up. We'll set an alert at like 269 in that range. And then if you would already have an alert here, then you could just turn it off or adjust it. But yeah, I mean, that's the thing. That's what a lot of trading is it's not like these massive returns. It's not these massive moves. It's literally just doing homework and doing work. At the end of the day, people think trading is like a passive way to make money, but they don't take into consideration the time that is required to look at these plays, seek out opportunity. And obviously, like, before you guys take a trade on these, make sure you guys do have like some sort of checklist, so you understand like the earnings reports, you understand stuff like that, so you're not holding through an earnings just because it's more risky to do so. That's what I would recommend doing, guys. So I hope you guys all enjoyed it. If you did, hit that like button, subscribe, and we'll see you guys in the next one. Take care.